Markets dropped again after the classic dead cat bounce. But what if this is a double bounce in disguise? Welcome to Daily Market Waves from Investing Angles, where every candle speaks, every Elliott Wave reveals, and we chart the turn before the herd even blinks. Today's wave lineup is high voltage, volatility, flagging, but not in a comforting way. Dollar index, flashing strong RSI or divergence. Is it prepping for a surprise? Bond yields, flying just as we forecasted, while TLT, let's say it didn't reward those who did the setup. In commodities, oil, larger bearish odds are stacking up. Silver and gold, diverging path, but will they cross again? Uranium, early hopes building, and we are tracking them candle by candle. In equities, S&P 500, a full angle breakdown with a special deep dive into financials as earnings season kicks off tomorrow. What are the candles whispering? Nasdaq, updated Elliott Wave roadmap, and it's not what most expect. Features of the day. Pfizer, we nailed it again. Another chart win. Nvidia, rallying, but is it healthy or just hyped? TSMC, a chart to make bulls sweat. We'll walk you through the EW damage. We just passed 14,000 subscribers, and we thank each and every one of you for riding the waves with us. Got a ticker or ETF you want us to analyze next? Drop it in the comments. We might do it live. For real-time high conviction setups, check out our private Discord where Master Trader Kyle posts with surgical precision. Smash the like, subscribe, ring the bell, and share this with your trading crew, because timing is everything and the turn waits for no one. Let's dive into the charts, starting with volatility. This is the volatility daily closure today, and what we are seeing here is that technically the green candles invalidated an immediate move down. However, this is, for example, on the index itself, is a Harami candle, bullish Harami, and often Harami confirmation comes after backtesting a new lower low. And the same thing here on the futures, we have a Harami candle with a potential move higher. However, we cannot exclude a possible move lower before we can see another high. If we look at the 3-day frame, which also closed today, these candles are bearish Harami. However, I wouldn't be so sure until I see a strong confirmation. So far, these candles are positioned in a way that they can be also a consolidation candle, and maybe a few of them in a row before we can see a move higher. So this is something to keep in mind. And another interesting thing in volatility, so what we are seeing here is the potential bullish flag being formed. I cannot say how it will be completed, whether it will go immediately higher or we can see another move down, bounce here, and move up. So if this happens, and we might see quite a few more bounces here within this channel, if this hypothesis materializes, we will see a move towards 63.82 with a possibility of 96, which is quite scary at the moment. Well, we keep this in mind and we move on to the dollar index. Let's have a look at the candles first. First of all, I'd like to say that candles are bearish, and this is the daily closure here, and this is the 3-day closure potentially tomorrow. However, I'd like to say that what I'm seeing here is the very strong, if this picture doesn't change in the next 2 hours, we will get a very strong RSI divergence here on the daily frame, with a good chance to see a move upward starting tomorrow. And for the 3-day frame, the candle is closing tomorrow. And this is what I was just talking about, potential bullish Harami. This is a bullish Harami on the previous candle. And what we are seeing here is a test of lower lows. If this candle closes like this tomorrow, no questions asked, we are moving down. However, if this candle pulls back and even forms a green one, this would be a very first and strong step towards forming a bottom, potential reversal on the dollar. And speaking about the long-term frame, that's something that we are tracking. At this point, it's not clear whether it's going to be this bottom here, whether it's going to be wave 2, extended wave 2, or it's going to be wave 4. In order to form a very convincing wave 4, I would say that the dollar needs to move below July 2023 low, which was 99.578. If it does, well, it would be a very strong confirmation. Let's see how it develops in the next couple of days. So far, we are seeing divergence, which could trigger a strong reversal. Now let's move on to the bond market, and we will have a look what bonds, yields, and TLT and everything else is saying. And I would say it's a big shout here. Yesterday we discussed a potential bullishness of these red candles because they were incomplete dark cloud cover. Yesterday we have a very good confirmation that they are technically invalidated, that bearish odds invalidated. Although the bullish odds are not super strong right now, but with the chance of moving higher are significant. And I would like to mention the 5-year yield. So it's moving up like there is no tomorrow. Four green candles in a row. All right, so that's the perspective, and we will see the weekly closure tomorrow. It will be very interesting. This is the 10-year yield, the candle map. What I'm seeing, a fresh 8x20 EMA bullish cross with a technical negation of this bearish candle. A very strong closure in 19 minutes. It will be a confirmation of a bottom on the 3-day frame. No doubt about it. I highly doubt that that will drop to 425 in just 19 minutes. And the weekly frame perspective is quite bullish. If bulls hold it like this, it will be a bullish reversal. A very strong one, by the way. So let's move on to the next one. This is the spread chart that we discussed yesterday. First of all, it's a classical move what we are seeing right now. This is a 2-day frame. We have a gravestone doji, and now we have an attempt to cancel it. So 1 day left, 1 day, 1 hour left. So we'll see if this is closed above the high of this big hammer or gravestone doji, it will be bullish. However, it will be a double-edged sword because this closure of this high would move the price above Bollinger Band very high, and this would be a very strong concern by itself. And if we look at the daily frame, it's a classical bearish sandwich being formed here, and if it stays like this and we will see a big red move tomorrow, it would be a surprise. And speaking about the Elliott Wave chart, no surprises here so far. What I'm looking for is the ending diagonal for wave ABC here, which is corrective, entirely corrective. All wave A, B, and C all have more corrective features. And if this happens, if this hypothesis materializes, then we are looking for a move into the negative territory. So speaking about TLT, on last Friday, on April 4th, we said that TLT formed a very strong bearish reversal potential, and there is a very good chance for dropping down. Now, as of today, TLT lost about 7%, and the chances for moving lower are significant. This is a bearish candle here on the 2-day frame, fresh 8x20 EMA cross, and the weekly frame is also closing strongly bearish, unless it recovers above this line, which is not highly probable at the moment. And speaking about this chart, something that we shared back on April 7th, saying that there is a very good chance to move lower, and this is exactly what happened. So the target almost hit here, and I think that this is possibly wave one of a bigger impulse down. However, at some point this wave might not be complete, so I would be looking for a potential alternative wave one here. Let me put it in a different color. So this is a possibility here, so this wave gets extended. However, it's bearish anyway, and whether we're gonna see a bigger flag here for an A, B, C for wave 2 or immediate move down towards the red alternative one, both paths right now are bearish. And the next one is this is the beginning of a potential impulse for the US 20Y, which is a inverse counterpart for TLT. What I'm seeing here is an impulsive wave of the bottom, potential wave 2 formed here, or it could be an extended wave 2 as an ABC, for example. It's not decided yet, so we need to see a very strong move here. And if this setup materializes, then we would be looking for something very outstanding. This would be wave 1, wave 2, wave 3 somewhere here, 4, and wave 5 up about 6.4 approximately at this point. This would be the best. Right, green. Okay, so this would be the perspective path for the wave, and this would be a very significant one. And it might happen in just a month or maybe a couple of months, but we'll see what our administration and the Fed had to say. Now let's move on to the next chart, and this is quite scary chart. I am not showing it frequently, but nevertheless it's worth keep tracking it. So today is April 10th, and this is the annual chart for the 10-year yield. If you remember our discussions in January, February, we said that this is the 100-year moving average, and this been the third test of the line of the rejection of the resistance lines at this moment. But if the wave moves higher, there is a very good chance that it will surpass it and finally will cross it by the end of the year. So this is the annual chart. And another important signal here I'd like to point is this is the 8x20 EMA bullish cross, which happened on January 2nd. And the last time and the only time we had the bullish cross, it was in January 1956, and you know what happened after. So there is a very good perspective. If this cross holds until the end of the year, then we might see a very strong move higher by the yields. Well, that's all about the bond market, and now let's move on to our commodities sections, and we start with oil. What we are seeing here is oil continues to stay bearish. First of all, we discussed yesterday that the bullish candle that oil formed didn't have enough technical power, and we were expecting it to resolve downwards. And this was another frame, 8-day frame, which closed today with a very strong bearish candle. What I can say that this candle went a little far and a little too fast. Maybe we'll see a consolidation for several periods before oil moves lower. However, I would like to say that this is an escalation, bearish escalation from the 8-day frame, which closed last week with a very strong bearish continuation candle, and now oil remains bearish. Speaking about the chart, this is the chart that we've been tracking. For those who listens to us for the first time, I'd like to do a quick review. This is the chart that we first identified in December 30th, 2024. We were saying that oil has a very good chance to move to this target and then resume the ride downward. So this is the same rectangle C that we placed then in December. So you can see what happened exactly in the middle of January. Oil hit the target with great precision, and since then it was falling. And the last one that we discussed, it was this target that we said that oil formed a bearish flag, and when it was $70, and it has a good chance to fall here in these targets. So far, oil already surpassed the target and it is moving down. Well, so what we are seeing here is that we have a target for wave 3 hit, but I'm not at this point, I'm not sure that whether the wave is going to continue or move higher. And for that, we will look at the short-term frame. This is what happened. I think that oil completed the first impulse down, and now it is forming wave 2, which could be already complete if we consider it here. However, I think that it might take a little more time to form this consolidation wave, and we will see another strong wave down potentially next week. So that's all for oil. Now let's move on to the precious metals, and we will talk about gold and silver. So far, yesterday I mentioned that silver needs to close above this red candle on a daily frame, which is Friday's high. So it failed. However, there is still chance of moving a little higher. So the odds on the daily frame remain bearish. And the same thing happened on the 2-day frame. I cannot see how silver overcomes this big red candle. Although we might give silver another 2 days, so Friday and Monday, to try to overcome this candle. And speaking about the weekly frame, silver is trying to negate this big bearish engulfing. Let's see what it can make tomorrow. I highly doubt that this candle will be negated. Speaking about the Elliott waves, what I'm seeing here, yesterday we discussed that the blue pass will likely be invalidated. I think with this move today, we can safely remove it for now. And now we will focus on the red and purple, potential purple pass. What I'm seeing here is that we might have this wave A, this would be wave B, and this would be wave C. Ideal target for wave C would be somewhere in this rectangle, and it is very close to it. So that about the structure of this wave, it looks like it is forming an ending diagonal because of this potential wave 3 wasn't able to expand properly. And I would say that this wave 3 is potentially small. It's smaller than wave 1, and it means that wave 5 for this particular setup must be shorter than wave 3, and then we can try to measure it. So this is the target for, this is the wave 3, and if we use the same target, so this wave 5 should not be longer than this wave, and this would be the target for wave 5. And I am talking about this possible structure 1, 2, 3, 4, and 5. So if wave 5 makes it to this level and doesn't surpass it, you can measure it. You can measure wave 3 and see so that wave 5 must be at least 1 basis point shorter than wave 5 in order to keep this potential wave structure. If it crosses this level, then we would be looking for something different. Well, that's the perspective for tomorrow, maybe the day after tomorrow. And now let's move on to the SLV. So SLV is bullish on the daily frame, potentially forming a bottom. However, on the 2-day frame, it failed to confirm bullish Harami here, and although there is still a good chance we will see a higher move. However, I'm highly skeptical about closer above this big candle. The same on the weekly. That will be important to see how it closes the week tomorrow. And finally, on the precious metals, I would like to speak about gold. This looks like it is a final exhaustion rally here, and there are a couple of things I would like to say. So first of all, we have a triple divergence here, 1, 2, third one. We have a higher high here, but a lower RSI, and this is a very concerning point. And if I looked at also at the couple of hourly frames, they are not looking very healthy at this moment. So I would like to say that this is a very risky setup right now, and there is a good chance we will see a strong pullback. The same for a 2-day frame, and the weekly needs to close above this high of the previous week in order to keep the odds bullish. If it fails even 1 basis point, it will be a bearish and possibly a bearish confirmation of a much bigger move. That's all about precious metals, and now let's move on to uranium. I will talk about only one chart today, about one instrument, Energy Fuels, or Quad U. What we are seeing is a potential bullish build-up of candles here, with a second closure about 8 days moving average. On the 2-day frame, Energy Fuels technically confirmed a bottom. And if bulls hold this level or push it higher tomorrow, they might form a very strong bullish engulfing on the weekly frame, which would be indeed a very significant sign of a bottom. Although it wouldn't be confirmed, but nevertheless, that would be a very good chance. And if we look at our setup that we discussed back in March when we spotted the flag, so flags completed right in the middle of the target, and right now Energy Fuels are trying to form an impulsive wave. And if it happens indeed, so we are tracking it closely, if there is a impulse, a corrective action downward, and the start of another impulse, then we might be talking about a strong reversal. So this wraps up our commodity section, and now we are moving to S&P 500. So what we are seeing here today. Yesterday it was a very strong dead cat bounce, and today it was an attempt to negate it. However, it wasn't fully negated, and there is right now, I would say, the very neutral odds here. So there are chances for both ways, and I would say that the bulls have slightly better chances for tomorrow. So we might see higher prices. This is technically the Harami, bearish Harami setup. So we might see a higher high tomorrow, but it might be reversed and moved down. That's how Harami usually work. And the similar setup for all four major indices. And I would like to emphasize the looming very strong bearish crosses here. So we might see a very high spike by the price, but in the end it might move lower. And if we'll remember the setup for volatility, it could be just a mirroring one for S&P 500 and the major indices. If we look at the bigger frame, the 2-day frame today, it wasn't very convincing. First of all, it failed to form a bearish, it failed to form a bullish bottom, and particularly for S&P 500 and for IWM. So these were bearish. However, I'd like to say that some technical support an idea of moving higher, and we would be looking for some higher moves tomorrow. However, I'd like to emphasize, even though we are seeing higher moves tomorrow, it doesn't mean that they will close the day with the green candles. If we look at the technical roadmap, this is monthly MACD. All indices made crosses, starting with IWM or Russell last month, and the Nasdaq joined in the final hours of March. And first thing that Dow Jones and S&P 500 opened April was forming these crosses. And I'd like to say that these crosses are of a nearly record or record magnitude, like for S&P 500. And we know the statistical estimates. We shared multiple studies on this, and we know what to expect. If you're interested, you can read them in details at investingangles.com with full estimates on multiple different frames and what so that you will know what to expect in the nearest future. Now let's move on to the Elliott Wave perspective, and this is the short-term, this is the midterm chart for S&P 500. What we were looking yesterday is this particular setup. So this wave A potentially formed, and now we would be looking for wave B. So what happened today is that the index moved down, and technically let's have a look at this one first. So this is what the wave at the 15-minute level, and it is clearly corrective at this moment. And I would say that this is forming a bearish flag one way or the other, and the chances here are twofold. So first, we can have potential move right here tomorrow, or another way is to complete an ending diagonal here and move down. So I would say that the red path is slightly better, has slightly better odds at the moment. And I would be looking for this particular target for wave C and for the ending diagonal. So let me mark it here. So somewhere here, 56.79. So these are very preliminary estimates. So that would be the perspective. And now let's return to the previous chart. So this would be wave A, even if it makes a little higher here. this would be the first wave of a bigger correction, because after this wave A, I wouldn't see how this short wave would make it for wave B. We might see a much stronger wave, a much longer wave B, taking its time, probably even to develop for a couple of months. All right, so now let's move on to the sectors. So what we are seeing is absolutely identical candles for all sectors. Maybe the only one bullish, stronger bullish, is consumer staples. All other sectors formed the same type of candles, potentially bearish Harami, with a very good chance to move lower after making some noise at the higher level. And as I announced at the beginning, let's have a look at financial sector, which starts reporting tomorrow. And I would like to make it on a 1 hour frame. So what we are seeing on a 1 hour frame immediately here is that, make it a little clear here. So let's remove indicators. So what I'm seeing here is very similar setup to what we just discussed for S&P 500 index. I'm seeing a very strong, potentially bearish flag here with a fair chance of making a higher high here and then moving down. And we can do some early estimate for this particular move. This would be something like this, and we would be looking, okay, so let's assume it will end somewhere here, and then the target would be somewhere here. So this would be for financial sector, and I would say that it might move higher on Friday, even Monday, but after that I would be looking for a decline, and this would be somewhere here, and the potential 13, well, looks like very significant one, could be like a 17% decline following just this bearish flag. A very simple estimate. All right, so now let's move on and have a look at the biggest companies here. So what they are saying, it's the candles are technically somewhat similar to what we've seen in the sectors. So bearish candles with a very good chance to move lower after making a higher high. And if you look at the 2-day frame, for example, Microsoft formed a bottom here on the 2-day frame. However, if we look at the weekly frame, it has a chance to form a bullish engulfing. Let's see what it completes tomorrow. But nevertheless, I would like to say that these rallies here and there, they would be corrective. So it's not that clear for Amazon, because if it moves a little lower tomorrow, it would be a bearish closure. And for Nvidia, Nvidia, we will talk about it just a little later. And for Meta, for example, if we look at the weekly frame, it's not clear at all. If it pushes a little lower, it will be bearish. A little higher, it will be bullish. So the very critical closure will be tomorrow. Speaking about Berkshire Hathaway, this is a 2-day frame, and I would like to note this an interesting failure today. This candle, 2-day candle, failed to close about the high of the previous one by just 19 basis points, and this is considered as a bullish failure, and we would be looking for a bearish pass for for the stock. Let's see how it closes tomorrow, but if it fails to form, to negate this bearish candle, it will be opening a bearish path. All right, so now let's move on to Nasdaq. Elliott Waves, what we are seeing here. This is a short-term frame, and this is something that we discussed earlier today with our members on the private Discord room, saying that Nasdaq made this big overlap, and technically it invalidated multiple bullish setups. And now we have technically two most probable paths for Nasdaq: either an immediate move down here, which is less probable at the moment, or a potential for a higher high before making a move down. Well, that's a bearish flag, and it can extend a little higher, maybe even for a couple of days or weeks, but I highly doubt it will form an impulse here. And on the bigger frame for Nasdaq, this is somewhat similar, that we are looking for S&P 500. As I mentioned in one of my writings recently, that this wave B could be more condensed because of very high volatility, and we might see it sharper, ending just in a couple of days instead of a couple of weeks, as I initially put it on the bigger chart. So that's the perspective for Nasdaq. We are looking for a more complex wave B, potentially as a zigzag or a flat. Now let's move on to our features of the day, and we'll start with Pfizer. This is one of our calls that we made way back in February. For those who were with us, might benefited well from this call. We were saying that Pfizer is bound to move towards 23-21 target, and this is exactly what happened. So Pfizer is trying to find the bottom here, and if we look at the candles so far, the monthly candle looks bearish. However, if we look at the daily frame, this is the daily frame or a 2-day frame, it's not that clear. There is a potential for forming a bottom. However, Pfizer would need to form at least a strong bullish confirmation, bullish candle, and a confirmation on the weekly frame in order to reverse the odds here. And if we look at the even bigger chart, which is also was one of our beautiful calls way back in February 2023, when we said Pfizer was 42.95, and we said that Pfizer is set to lose big to move toward 30 or 25. Well, everyone was very skeptical about this call, but nevertheless, this was February 16, 2023. This is where Pfizer is now. So after our call, it lost exactly 50% of its value. And if we look at the chart that we updated later on, and the last update was almost a year ago, exactly a year ago on April 8, 2024. So today is April 10, 2025. So this was the chart that we shared then, and now we are seeing that Pfizer is approaching our final target area, something between 22 and 14. Well, 14 is quite far away, but I would say that we might see a very strong bottoming patterns here, because it's getting closer to the long-term support channel line. Well, that's all for Pfizer, just to stay alert for potential reversal. And now let's move on into the final part of our discussion today is Nvidia and TSM. Let's talk про Nvidia first. What we are seeing here is Nvidia is probably set for a bullish reversal, probably, if it closes like this on the weekly frame, or I would prefer it a little higher. Today it formed a 2-day bottom, and unfortunately it formed the bearish Harami on the daily frame. So tomorrow is gonna be a battle, big one. Which one wins, either Harami or the bottom on the 2-day frame? So the weekly is not yet decided. Speaking about the Elliott waves, let's try to update it together. First of all, I'd like to say that this was our call on December 27, saying that Nvidia has one more move higher, and then it would be looking down for the 90.69 level, which would be 40%, approximately 40% of the top. And guess what? This is 90.69, and Nvidia made it this week. Perfect call. And I would like to say that on top of that, Nvidia also formed, invalidated an impulse down. So technically this wave right now, what we are looking for is not an impulsive wave, and this is a good sign for those who would be looking for a stronger reversal. So technically this is a flag right now, and what I would say that Nvidia possibly formed wave A of a bigger correction, and we would be looking for wave B here, and the start of this wave is not impulsive, and so something that we would be expecting now is maybe something like this, some formation, and this would be wave B of a bigger correction before we are looking for wave C further down. However, it's not that clear yet, so this is a corrective wave, very difficult to predict corrective waves. So far, let's see how this wave upward develops, and we would look into this shorter time frame. So this is wave A, and we would be looking for wave B somewhere here. So that's the perspective. That's something that we need to see how it develops. And this these are wave A, and these would be wave B for the bigger structure for Nvidia. And today is not March, it's April 10th. Okay, so that's the perspective for Nvidia. Let's see how it develops for the very first wave, and after that we would be looking for some estimates, level estimates, and the wave estimates. And this is another call that we made on Nvidia, just a technical one. I'd like to remind those who didn't see it. On December 29th, when Nvidia made a MACD bearish cross on the 10-day frame, we said it had a chance to move at least 20% down. On the average decline would be about 50%, and the maximum about 80%. So far, Nvidia dropped 43%, which is getting closer to the average. However, looking at the candles here, I am not seeing a strong reversal, so we might see a continued decline. But anyway, our forecast was perfect here for those who had patience. And now the final discussion of today is TSMC. Yesterday, everyone was cheering that TSMC made a very strong move upward. Well, it was indeed a 12+% move higher, and today it lost another 5%. But what I'm seeing here is that it's not an impulsive structure here, and there is way more dangerous development here. So I'd like to emphasize this is a freshly made 50 by 200 days moving average death cross, which is very significant for the stock. And this is the monthly perspective for TSM. There is a possibility of a very strong 3 black crowds on the monthly frame. Plus, to make things worse, this is a MACD bearish cross, and I would like to zoom it like here. So of a record magnitude, and I would like to emphasize this magnitude is 25% bigger than the previous one. And the previous one, if we look at it from statistical perspective, the previous one was a loss of 60% of TSM value. So if we, let's say, add 25%, we would be looking for a loss of 75% here. Just a simple math. I'm pretty sure it's going to be a slightly different number, but nevertheless, this is the perspective for TSMC, and 75% loss of the top, it would be about $55 target. But this is not the biggest concern. The biggest concern is here. So this is the Elliott Wave, and the previously discussed, I was looking for 1, 2, 3, 4, 5 potential. Where is my 5? It was somewhere here. So this was potential big impulsive wave. However, this overlap here, TSM broke this level, the high of wave 1. So technically this setup is invalidated right now. And it could be either an ending diagonal here, which I highly doubt because of the impulsive structure of this wave. And now we have to zoom out in order to see a bigger perspective structure. And I don't have this chart yet. I need to work on it. But nevertheless, we could have an estimate. So this is now what happens. This were waves 1 and 2 in 2002. Then these would be wave 3 and 4, waves 3 and 4, and this would be wave 5 of a super cycle. So instead of having 5 there, we now have 5 here. This is what the decline told us. And if we have a wave 5 here, a super cycle, then we would be looking for at least 50, 62 or 78% of decline, which would be in alignment with what we just discussed in MACD part. Well, I think that in a couple of days I'll finish this chart and we'll share it with everyone. It would be a very interesting one. Let me wrap it up here. From volatility's fading frame to bond yields shooting sky high, today's session was full of clues for those watching closely. Commodities split path, financials face a critical candle test, and then Nasdaq just redrew the map. We charted oil's bearish build-up, tracked uranium's hopeful heartbeat, and spotlighted Pfizer, Nvidia, and TSM with unfiltered precision. If you are done chasing headlines and ready to lead the charge with candles, waves, and stats, head to investingangles.com. And yes, we are now on Blue Sky. Same handle, same edge, just a bigger sky. Follow us there and help spread the signal. Thanks to our entire community, over 14,000 sharp traders strongs. Your support drives every chart we share. Until next time, stay sharp, stay objective, and remember, at Investing Angles, we chart the turn before the herd even blinks.